The tax-exempt municipal bond market is one of the largest investment sectors in the U.S. in terms of both assets and issuers. The municipal bond market, or as we call it, the muni market, is composed of over $3.7 trillion and over 60,000 issuers. The taxable muni market is a subset of the overall muni market and has been attracting the attention of international investors. Taxable muni bonds were first introduced as an outgrowth of the U.S. Tax Reform Act of 1986, and they were a way to give municipalities the flexibility to finance a wider range of projects, including those that might not qualify for tax-exempt status under restrictions imposed by the U.S. Treasury. As a result, the taxable muni market has experienced significant growth, and it's become an attractive asset class for institutional investors both domestically and internationally. The taxable market is about $500 billion and growing, and there are more than 13,000 individual issuers. Muni bonds are debt obligations issued by states, cities, counties, and other governmental entities which use the money to build schools, highways, hospitals, sewer systems, and many other projects for the public good. The muni bond sector has a remarkable credit history of low defaults, as most issuers are backed by the taxing authority of the state and local governments or a dedicated revenue stream of municipal infrastructure projects. The muni bond market offers non-U.S. investors access to a market which helps to fund everything from bridges, highways, tunnels, to hospitals and universities. U.S. infrastructure needs continuous funding, and muni bonds support about 75% of muni infrastructure projects in the U.S. With such a diverse market, you can imagine the investment opportunities this presents for active managers like Eaton Vance. A portfolio of muni bonds will typically look a lot like a yield play. They actually offer a yield of Treasuries Plus, which at the moment is about 3 to 4% prior to currency hedging. The securities are generally A-rated or better, and for the past 10 years, taxable muni bonds have generated the highest total return among the various classes of global investment-grade fixed income securities. Muni bonds have an excellent credit default history. Their default rate is very low because they're backed by taxing authorities and other dedicated revenue streams. For instance, since 1986, there have only been 81 muni defaults. This compares with 1,378 corporate bond defaults. They also offer diversification benefits as part of a broader fixed income portfolio, offering relatively low correlation with both equities and lower quality bonds. Well, we think there'll be a modest flattening of the yield curve this year. With slow global economic growth and little inflationary pressure, the drivers for long-term yields are relatively weak. In addition, during the last 4 interest rate hiking cycles, municipals have outperformed treasuries. Eaton Vance is one of the longest tenured firms in the municipal market. We have over 37 years of experience and a measurable track record going back to 1978. With over $32.5 billion in managed municipal bond assets, we're one of the leading municipal managers in the United States. We have one of the largest and deepest municipal teams in the industry, and we've succeeded in delivering strong, long-term performance with a focus on producing solid income for our investors. From a product standpoint, we have one of the broadest selections of municipal strategies in the marketplace, and we offer strategies that span the entire yield curve and credit spectrum. Most importantly, for our institutional investors, we have the willingness and the flexibility to manage mandates that meet client-specific needs and objectives.